everybody in this room is 8 to 13 trades away from the trader you want to be. That's all. But very few people get there because they don't adhere to the one system until that neural pathway is built. So that's the process if you want to be successful, folks.
Welcome back to the David Paul series here at Conlucro. In this final part of his lecture at the Johannesburg Stock Exchange, David reveals the missing piece that connects psychology, discipline, and execution. The process of transforming trading rules into habits that eventually run on autopilot. He goes beyond theory to show how real discipline is not a natural talent, but a skill that's trained and reinforced through repetition. By understanding this process, traders can finally bridge the gap between knowing what to do and actually doing it. And once that connection is made, consistency, confidence, and long-term success in the markets stop being goals and start becoming your new normal. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the Conlucro community to support the channel and keep improving as a trader.
We have runs of good ones and runs of bad ones. Now, between your ears, there's a thing called the pituitary gland. And that pituitary gland pumps out mutti. When I'm in England, I have to tell them what mutti means. But that pumps out all sorts of hormones into your bloodstream. And those hormones are actually responsible for every emotional state that you have. So, when you fell in love with that young lady of yours, those hormones were just pumping around your system. All right? When I leave the gym, folks, I'm no longer 63, I'm 17 again and back in the Royal Marines, and as I say, can be quite stroppy when I leave the gym. Okay? Now, similarly, when you have one good trade, 2 good trades, 3 good trades, the pituitary gland is hard at work. Okay? And it's pumping this mutti into your bloodstream. And you change completely. I know people that after 1 good trade, they're a different person. Okay? Certainly after 2, after 3 winning trades, they're in the bar buying drinks and the souls have never bought a round in their life. What happens is that after a series of winning trades, we become euphoric. And if you look in the Oxford Dictionary, the definition of euphoria is invincible. So what happens is that you say, sod all that position sizing, let's have a big bet. And risk managers in the City of London are actually taught these days by the FCA to, in fact, that's the equivalent of the FSP here, to actually look at the traders under their control and assess their susceptibility to euphoria. Now, you're going to find that once you get the 1 or 2% into your head, it's in fact not the runs of bad trades that cause you to go broke, it's the run of good trades, because in a run of good trades, you actually trade far, far too big. So just be careful about euphoria. Now, our job is to find an edge in markets. Barry's analysis of all you need is one pattern. That's all. You just need one pattern to be successful. The head and shoulders pattern could be your pattern. He put a chart up of lots and lots and lots of patterns. I love my wedges, falling wedges and rising wedges. Those of you that are trading Forex, there's a textbook falling wedge in the Euro 1 daily chart at the moment. I'm very fond of my fib levels and harmonic patterns, which are my own personal edge in both the stock market and in the Forex market. But you need one little pattern. You need to practice really, really good money management, and that just means not losing any more than 1% of your loot, or at the very most 2% of your loot on any one trade. And then the third thing is to build the discipline to just do it over and over and over again. Many of you will see those ghastly adverts that Alan Gray put out. Do you know those long, boring adverts? Alan Gray are great. They've got a process that Alan Gray was taught by old Templeton a lifetime ago. and they do the same thing over and over and over and over again. I went to one of their lectures the other night in London, where it's Orbis across there, where they actually put on a case very similar to your case, where they justified fundamentally, based on value, that Honda was a much better buy than Tesla. Okay? Wonderful presentation, but they've got a process and they stick to that over and over and over and over again. And your trading edge does not have to be complicated at all. Finding a share that's undervalued, that's growing earnings aggressively and safely, that's in the throes of a good trend. I like always for a share to be above an 89-day moving average. 89 works for me. And then you need some little pattern to finesse the entry. Could be a triangle, could be an ascending triangle. There's a heap of them, and a simple book on charting will get you most of the way. And then don't lose any more than 1 or 2% in any one trade. And then you need to build the discipline. Now, ladies and gentlemen, can discipline be built, or is it God-given? Of course it can. Why was an old man like me in the gym this morning at 6:30? Why? Twice a day. Did it take any discipline to get me to the gym this morning? None. None whatsoever. The paradox is that when you've got it, you don't need it. Okay. All right. That's the paradox. So, to build discipline, folks, you're going to have to grit your teeth and stick to the process. So the first step would be to sit down with one of these guys, sit down with Você, put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you folks is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. That's going to take quite a bit of doing. It is a rite of passage. Now, I'm not a psychologist, and I've had psychologists in my classes, and they still don't know why this happens. But to build a habit, okay, any habit, you've got to grit your teeth and do it. And then all of a sudden, you actually build this neural pathway between your ears by doing it. You're going to find that sticking to the rules for the first few trades is difficult, but I've done this with many, many people over the years when I used to do one-on-one mentoring. I don't do it anymore. Somewhere between 5 and 13 trades, you build the pathway. And you'll find that the discipline to stick to the rules is no longer required. Because that's what you do. So my challenge to you all is, out of this, get busy, make a nuisance of yourself, get yourself to a point where you've got a written plan that suits you. It should not be more than 1 page. Think about position sizing. There's a good book on it by a guy called Van Tharp. It's called Trade Your Way to Financial Freedom, on position sizing. And then the real exercise is to focus on perfect execution of that plan for somewhere between 5 and 20 trades. Now, I personally build a habit very easily. And many of you will say that's great, but it also means that you can build a bad habit very easily. So, the one thing that I can say which is positive, that everybody in this room is 8 to 13 trades away from the trader you want to be. That's all. But very few people get there because they don't adhere to the one system until that neural pathway is built. So that's the process if you want to be successful, folks. Sit down, put together a fairly simple system, adhere to 1 to 2% position sizing, and then the real work starts of being able to follow that system through thick and thin. And you're only about 8 to 13 trades away from being able to do that. That's all.
What David Paul just shared brings together every core lesson from this entire series. From probability and expectancy to risk, position sizing, and discipline, it all connects into one powerful truth. Trading success is built, not found. In the beginning, we learned that trading is a game of probabilities, not predictions. Like the coin toss, your goal isn't to be right all the time. It's to make more when you win than you lose when you're wrong. That's where a real edge begins. Then we saw how high win rates can be an illusion. Accuracy without proper risk control leads nowhere. What truly matters is expectancy, the balance between reward, risk, and consistency. Professionals don't chase perfection. They protect capital and let math work in their favor. In the next step, David showed that even with a good system, survival depends on how you size your trades. Clusters of losses are inevitable, but traders who risk small live long enough to let probability play out. Consistency doesn't come from being right. It comes from staying alive. And finally, he revealed the bridge between knowing and doing, discipline. The ability to follow one system long enough for your brain to build the pathway of consistency. You're not born with discipline. You create it through repetition, trade after trade, until it becomes second nature. That's why he said, every trader is just 8 to 13 trades away from becoming the trader they want to be. The only reason most never get there is because they quit too soon or keep changing the plan before it has time to work. So remember this, success in trading isn't about finding more strategies. It's about mastering one. Keep your system simple, your risk small, and your execution consistent. Because over time, those habits form the true edge that no market can take away. And that concludes this special series featuring David Paul's lecture at the Johannesburg Stock Exchange. A true tribute to one of the great minds in trading, and a lasting reminder that mastery is never built on prediction, but on process, patience, and disciplined execution. Please also remember that our mission here on the Lucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the Lucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.